Financial disclaimer. The information provided in this stream is for educational and informational purposes only and should not be considered as professional financial or investment advice. We are not licensed financial advisors, and the content presented here is based on our personal opinions and experiences.
Hey man, just found the next guaranteed multi-bagger.
Hey man, you found another one? What is it this time?
Come check this out.
Okay, next please. How can I help you, young man?
We want to go all in on POL. You think we're scared of being late to the party? Now watch this.
Well, that's fantastic. A really smart decision, young man. We can put that check and it's gone.
Hey, welcome to the stream, everybody. How are you, Dane?
Hey, how you doing?
Or is it Santa Claus that has arrived a bit early, or what?
Oh, just here for the stream, you know?
Yeah, we could need some help.
Elevating stock prices for the old Christmas season.
For sure. Yeah, did you see the POL action? We talked a little bit about it on the stream on Thursday.
Yeah.
But did you say they got up to 1,000% in a day?
It was close. I was at work and I just pulled it up just because I saw it was popping, and it was like 900% or something insane.
Yeah, that was. I've actually had that in the tracker for a while, but I never bought it. I have followed them, but I never bought in because they have been hit quite a bit and got really low, and I thought this is not going to work out. But yeah, do you think it was like a meme thing or what?
Yeah, it must have. I didn't see any reason, so I'm assuming just momentum. I don't have them in my spreadsheet, which means that they've never been interesting enough on my screening process. So
no, that was a bit of a different one for me because I actually noticed them by listening to a podcast.
Okay.
And I don't remember which analyst that talked about them, but. He was bullish back then, but this is a while ago, and a lot of things have changed, and I just thought it looked very ugly, but I think it landed on 500% that day.
You're making me curious. I'm just going to pull them up real quick, because like I said, I never had looked at them.
And I think I saw them yesterday too, that they were up again 40%.
Well, yeah, when it's that volatile and the price is bouncing that much, it's hard to find out where it's going to land.
Yeah.
But yeah, I'm pretty sure I looked. I didn't see any news or anything. So
no, I couldn't find any news. But we talked about earlier, you know, of course it was a joke, but we talked about GME on the stream, and the day after it was it was up. And yeah. On Thursday, I went through the company DSKE, and on Friday they got bought up, so it went up 65% yesterday. So the conclusion is to be, you have to tune into the stream, right?
Basically, we're covering the hottest stock of the day.
Yeah, we have had some big moves actually, but it's good to see, even though I was not an owner, that you are paying attention to these things. Of course, acquisition, a buy is never easy to predict, but yeah, cool to see.
Yeah, no, I think no matter what, though, is you know, like we've said too, in terms of our process, like it's all about finding a way
cool to see,
to get consistently into stocks that you are comfortable putting. Like, at least for me, it's concentrated. Now, if you're under the impression that you're going to spread your bets over like 100 stocks or so, maybe some of these opportunities we'd be able to hop into if you're putting a smaller percent in. And that's a great example. And I know RK really did this. And, maybe as I get further into investing, I'll try and do it. I think the reason why I tend to invest in only a few companies nowadays is because of time. I don't have enough time to sit there and dig into the details on 100 companies, at least not to the credit where I'm comfortable putting a ton of money into it. So if I am going to put a ton in and try and get these multi-baggers on only a few companies, it needs to be like a just everything needs to be a buy for me. It just needs to scream buy to me. So with something like these, if you were only putting a small percent in, like let's say you put 0.5% in, but something goes up a 10 bagger, if you're doing that consistently and you're able to catch some of these, that might offset the risk and increase your gains to the kind of levels that we're looking at. And I do think that was more of RK's style. I don't think he did say he went into 15 companies or 10, 10 to 20 or something like that. So it's not like he's spreading over too many bets, but I don't know. Some of these like Pole right now, from a fundamental look, it's not interesting, So it does have a really small share count, and I know this is the kind of thing that all the technical guys are looking at. Small share count, a lot of volume, that kind of thing. If you see that, some of these, that's why you see a stock pump, quickly.
Yeah. No, I think, and I remember from watching all the streams of RK, he mentioned many times like this. He could go through a company and he saw a few things, but he wasn't like crazy bullish on it. But he said this deserves to be in the portfolio at least, minimum.
Yeah.
So he just took some positions because probably he has seen the same as us that things can pop very quickly in the stocks that we are monitoring.
Yeah, I do think sometimes it's probably worth taking positions in some of these things. And like I said, maybe as time goes on, I just know that every once in a while, I'd rather just be super confident in just a few plays and just kind of park my capital there and just take the wins because the one, like I said, when I am super confident, very bullish on something and everything to me is screaming buy, I've called them pretty well. And not to say, like I said, you can't make a mistake, but if I put a stop loss and you've seen our valuation technique, it's very conservative. So a lot of times it's hard enough for something to even get down into our value range. And if it does, and it's not going to go bankrupt, then, those are the ones that really interest me.
Yeah. No, but it has it's been a green couple of weeks, the last or 1.5 week, something like that, and I've seen a lot of things go up, and I know we have talked about it earlier on the streams that we had on Tuesday and Thursday that it wasn't so easy to find a lot of interesting tickers. But today we have started with 2, and I think maybe we can find some more as we go along. But I also think that this stream will be a bit shorter than normal. We have to do some other things, so we have to cut it a bit earlier than we're used to.
Before the holiday here, so
yeah. But let's just dive into it then. We have the tickers LGO and CCLD. So I already have it here in my fundamental sheet.
Which one are you?
Who do you want to start with, Dane?
Let's do CCLD.
Yeah. So CareCloud is a healthcare information technology company which engages in the provision of an integrated suite of proprietary cloud-based electronic health records and practice management solutions. So it's a healthcare IT thing, right?
Yeah, it looks like it. Services and staffing. Its software as a service platform includes practice management, electronic health records, business intelligence. So all the different kind of like IT/service type things that tend to make a hospital function. Being that I work in the medical field, these are always important areas because the technology in the hospital is super important. I don't know how it is in your country, but at least in the States, it depends on the hospital you're at. A lot of the hospitals aren't connected, so it's a real pain when you're trying to transfer information back and forth, and that's slowly changing. But in the past, it's like everything's locked on islands from hospital to hospital, and it's a real pain if you're someone trying to get information. And for a doctor to have your accurate information from one hospital to another, it's extremely important that if you go to someone else, that like your history is completely updated to that next group of doctors. So
I just have experience by being at the hospital because I don't work there. But I remember when we had our baby, the nurse, she was complaining about that she had to document things on 3 different systems because they didn't talk to each other.
yeah, and that's a problem. And nowadays, a lot of that's going away. A lot of the platforms that are really starting to take over are starting to handle multiple functions all in one. And just from a business side, it makes so much more sense to have just 1 or 2 programs at most doing almost everything. And it's going to continue to get more integrated. And as information is able to travel, I know it's fast now, but everything should be connected. It really should be. And I hope this continues to push on these things. How much these guys are doing all that, I don't know. But all these companies that are doing these kind of things, it's really important. And it's definitely everything's going in that direction as the future goes on here.
Yeah. I see the share count is slowly increasing year by year. What do you think about that? We talked about it a little bit last week. I think that we noticed that there's not a big bump, but it's a consistent raise, which is like a little bit sneaky, right?
Oh, it depends. It depends what it's for. It depends if they're raising the cash for by doing that. And I don't know, is that compensation or is that something else?
Yeah.
You look at their debt, and their debt's not super high compared to assets, but
No.
in terms of the cash that they have on hand, it's high, which it's not necessarily a bad thing. They do generate cash flow from operations, so as long as that's coming in, it offsets that. I'd have to see exactly what that debt is from the report, but I did notice this had some insiders. It is a small company, guys. This market cap for me is 25. Is that what you got?
I have 25, yeah.
Yeah, so it's definitely this is nano cap, so this is real tiny, guys. So that's always an added level of risk just there. But like for my free cash flow metrics, they look pretty good.
Yeah, I saw they look pretty good, but and there was a $650,000 buy on the 20th of December.
Yeah, I think that's what actually made it pull in for me was the insider buy there.
And it also had a jump on 13% yesterday. Have you looked at the chart here?
Yeah, no, I saw that it got down, and that's probably a mix. And this is probably one of those ones that, yeah, I may have missed it, but this is the point of getting in, looking at these ones. Even though I missed this jump here, I think the important thing is getting this into my database, because it'll be one that now that I understand and I can look at, if this has any kind of pullback and starts to get anywhere down below because you can see there's obvious support at $1,
Yeah.
And to be honest, super bullish signal when it passed over the $1. I mean, I don't know if you're a technical analyst or whatnot, but I don't know. Are you on a day chart?
I'm on a weekly now.
Can you go to the day chart?
Yeah.
Because if you look at the day one, you can see where once it pushed past that $1, I mean, that screams buy. I mean, that's bullish as anything.
Yeah, and the volume is consistently high in 3 days in a row now.
Yeah, and it's actually even higher as it continues to push up to this $1.57 where it's currently at. So on a technical basis, obviously this is already kind of pushed through where I would be comfortable buying. But I do get on a valuation basis. Right now, mine says, because it's slightly levered and it doesn't have a ton of cash, so my Z score is a little low. But it's saying it could be worth up to 345. which this does have. It looks like a lot of intangibles or goodwill. I got to figure out what that is. There was in what was that 2020 and 21. I have some acquisitions or buys. It looks like.
Yeah, I also have that. They are paying a dividend. What I have noticed a lot on companies that are in this sector is that, at least on the Daily Mover screen here, they have a lot of good metrics. They look attractive, many of them. Do you know, like, have you noticed the same? Is that a thing, or?
For what metrics are you saying?
No, like the price to sale, price to book. They turn up green very often when you screen for companies. I can see that they often have a lot of good metrics.
Yeah, no, this one does. The obvious concern with this one, and probably why it got so heavily discounted, is earnings. Earnings, even though they have the cash flow and everything, they've never gotten the earnings up. It's just consistently negative. So. Yeah. They have to find some way to get these earnings to be positive before like Wall Street's going to really react. Now, obviously, you see that huge bump, but that's obviously from the insider. I mean, you know what I mean? So
the insider was, at least he was filed 22nd. He filed yesterday.
Does it say when it was from now? Let me see.
He bought the 20th of December. He
bought on the 20th, so this started to pop up.
So
he probably just did the same thing most technical analysts would do and bought on the volume there.
Yeah.
And he must have bought over some time here, because I'm getting from my shares here that, like, yesterday there was 469. Before that there was about 350 for 2 days. So that could have been him on that buy there. So
yeah,
to be honest, it might've been, I don't know how much, but a lot of this volume is actually him,
Yeah, I think at least on the 20th and 21st, that could be his buy. And then maybe he has bought more after that today.
Yeah, well, I mean, what's the volume on this? I imagine the volume on this isn't super high all the time. Average volume 63,000. So when you start to see those kind of spikes, that's what's going to drive the price straight up, because you're spending 600,000 shares. That's 10 times the average volume. So the share price is going to start to bounce, and it's not like he's going to be able to buy all at once. Even though it says that that's when the trade date was, it took a while for that to execute.
Yeah.
The value was 600,000. It was 500,000 shares that he bought.
And on those last 3 days, I don't think, I'm trying to look at the historical data. You have to scroll down to August before you had 343,000 in volume.
Yeah, what's interesting is that if you look right before his buy, this Sharnak Steven, the director, he got in at 71 cents with 25,000 shares. So I mean, he nailed it.
Yeah,
71 cents is like almost a bottom.
And did you see that they were selling at 18 not too long ago?
No, actually, I didn't even look back. Well, it's kind of hard to look back on some of these. And once again, that goes back to when COVID was around. That's why on the last stream, when I was telling you around, honestly, between 20 and 21, you can almost just cut that out of the chart. Like, it's just nonsense.
But I have a sale 18 of September this year, and it says $18, but that's not consistent to the chart. So what's going on there?
My guess, it would be having something to do with their warrants.
Yeah.
I'm trying to think. I know we had looked a little bit at these. Trying to figure out what these numbers and letters, because remember you had the one time you had thought the one thing meant that it was a sale or something, and it wasn't. It was.
Dane is talking about the letters here, that they can be a bit confusing.
With like options and all that. And at the bottom here it says if you scroll down to the bottom of the screen there, that's where it says like multiple transactions. So that's multiple transactions. So him on this last buy of 500,000, that was multiple. That wasn't that wasn't one big purchase all at once. And there's no way he could. There's probably not even enough people selling to get that kind of bounce.
Yeah.
But you know, this just goes to show you, and this is why sometimes when the chart just looks terrible, you know, after this huge sell-off from around the $3 range, and then you get down to like 70 cents. I mean, that's pretty oversold. And even on a what is this, a 1-year chart I'm looking at, you know, RSI drops below 30. And yeah, I know that's all technicals, but to be honest, that means a lot to a lot of people. And you know, on a book value, I have this definitely below book value. And
yeah,
on
I
a
just
cash
saw
flow
that the
basis,
guy,
it's
the
pretty good.
insider is also the founder.
Yeah, and founders, you know, when founders are buying, I would say that's always bullish, basically.
But I tried to
Almost.
open the SEC page, and it says no matching ticker symbol.
On the SEC page?
Yeah, so I don't know what's going on.
Yeah, mine pulled right up.
Oh, really?
Yeah. It must be, maybe it's typing in like a different thing or something for you. Sometimes I know when I pull it up, it does something strange. It's hard to always.
No, I found it there.
Yeah, I mean, they have just a borrowing line of credit of 12 million, it looks like right now. So that's most of the debt. Have some leases, but the leases aren't very much. What do you have for a dividend? You said they have a dividend they're paying?
Yeah, I have 99 cents, and then they paid $1 last year.
Really? I don't have any dividend listed for these guys. I wonder why.
But maybe
Oh, is it a
that's
special dividend?
Yeah, maybe that's the special dividend and why they could sell, you know.
Yeah, that's one thing I got to pay attention to, because I do see dividend payable, but it doesn't pop up on my share radar data. So I wonder if
Look here on Seeking Alpha, it says Care Cloud Preferred Shares Series A declares 0.23 dividend.
Gotcha.
That is from November.
Looks like they do have some preferred shares that they're being granted to management. So I imagine this this dilution that's coming through is probably due to management being compensated, using both common and preferred, which I don't really like that, to be honest.
Yeah. No, same. But for sure, it has some good operating cash flow, and if you just look at the book value, it trades well below that. What do you think about there has been a decline in revenue from last year?
A decline in revenue? Is that what you're saying?
Yeah.
Yeah, but I don't know. I don't know if that's necessarily negative. I mean, on average, they're still increasing. You know what I mean? Sometimes I tend to look at the average more so than just looking at the single years, because, like I said, this is almost why, like on the chart, I feel like if you take like a 5-year chart, you can literally cut out from 2000 to 2022. And on most charts, you can literally draw a line where you would see it would just trade kind of steadily through that period, because with the rates got so low, you know, like you can just cut out that giant bounce there, because you know, you see what I'm saying on the chart there?
Yeah.
So I always discount that when I look back now, because COVID just messed with everything. The data during that time is all messed up. Some companies, it didn't matter so much, but
and
you know,
if
you
you
did well during that period, that's actually bullish to me if everything's kind of kept going up.
Yeah.
But
if you
anytime
do
I
cut
see
out that spike, you get like the tops are like book value right now, 528.
Right, and you know, it is generating cash, but this is my big issue though, is it's not generating any earnings, which means that the business itself is still unproductive, even with the cash flow generation. So this cash flow generation is great, but it's not able to even cover the expenses of the business.
No.
So they got to get these margins better, like on an EBITDA basis, I have 11% margin, but then on EBIT, that -3.7 for net income. So if they're not able to generate earnings, even during these better years, I don't know. It's one of those ones that I'm interested when it gets real cheap, like if it dropped back down, I think it's interesting there. But in terms of like any kind of growth or anything like that, I'm not seeing anything impressive here.
No.
And I guess you could have been interested in this from that first initial buy, but by the time the owner there, started to buy, all this volume for insiders, you would be behind on it. You'd have to trade it, which I don't know how you. I don't know. I don't think it's interesting to me in that aspect. I don't think it would have been something I would have caught.
No.
Like I wouldn't say this was a missed opportunity for me. Not that I'm not happy that we looked at it, because there's something probably there, but
I see that it's also overbought on the daily chart. Not that you should pay so much attention, but when you get this volume also, you can get a little bit of a drop back, right?
Yeah. No, I think this one will pull back. I don't think anyone's going to continue to buy at these levels, not until something improves fundamentally with the business.
Yeah. Should we just go to LGO?
Yeah, we can keep moving. I'm just putting this into my database real quick. But yeah, if you want to keep going.
Pulling up LGO then. So Largo engages in the exploration and production of vanadium at the Maracás mentioned mine located in Brazil. The firm mines and sells vanadium pentoxide flake, high purity vanadium pentoxide flake, and high purity. Yeah. So they are doing business in Brazil. They are based in Canada.
Vanadium, huh?
Yep.
Battery technology. Titanium dioxide pigment plant using feedstock source from existing operations. Isn't that when what was that company with VHI that had to do with that? Starts with a K. I can't remember what the name of that company is. But didn't they have titanium dioxide? Kronos, right?
Yeah.
Yeah.
You know what? I don't remember what they were doing. But I just remember that they had very similar charts, all of those companies.
Which one?
No, but like VHI and Kronos.
Yeah, but weren't they significant shareholders?
Yeah.
Yeah, so they have to account for their accounting into their own. So the chart should start to look the same, because they have to, once you're over a 20% owner, you have to start like taking that percentage of the business into your calculation as a holding company.
Yeah, and they had way higher than 20. I think they own 80. So
right. So when you're significant, when you're controlling interest, you have to take then 80% of their liabilities and assets and put it into like your calculation.
Yeah.
So they're going to start to trend and look identical, because it's they're just owners in the business, so their business is the business that they own.
Yeah, for sure. There's no dividend here. It shows a bit safe in mine. Seems like they have good control of the debt.
Yeah, I mean my immediate issue here is cash flow, but they are young, but and it looks like they had earnings, but is that all just debt and share count?
Yeah, that's
what's their
like,
debt here?
From since 2017 they have improved the business, but then it has also stagnated a bit and even dropped. except the book value, it's very stable.
Yeah, but it's starting to creep down now because, like we're saying, they're not really generating anything from operations just yet. So this is probably all their initial capital just slowly getting burnt, you know?
Yeah.
Because, I mean, you can see, I don't know what your numbers are, but 21, I got 86 million, 61 million, 38 million. So this is going to lead to dilution soon. And you know, and now debt for me jumped to 67 million in the previous quarter here.
True. I didn't see
12,
that.
Trailing
I
12
didn't
months
see
here.
that jump.
Oh, and you know what? And how often are we filing here? Let me see what's going on with these guys. Oh, they do file quarterly actually, which is interesting. But let me look at this 40F here that they got.
You know what, Dane?
Yeah.
I'm gonna switch to your screen because I don't have the resources for the Canadian ones.
I just went to the SEC report, but yeah, you can switch over to mine if you want.
Can you share your screen then?
Yep, hang on. So it should be coming up here.
There, I think we are.
Here, I'll try and just zoom in a little bit here. So hopefully that's a little easier for you guys to see. But yeah, so I have long-term debt here of 36 now. You know, cash is at 54, but if that's just going to keep getting eaten away, because this income is that's kind of killing them. Just trying to see where that's all coming from, if there's anything that they can do to kind of change that around. Inventory's growing. You know what I mean?
Yeah.
They did a share repurchase?
Yeah, they did, but from 21 to 22, I think. Went from 66 to 64 million.
It's kind of strange in their position.
Yeah.
What's their? I just want to pull up a chart real quick.
Did you also see a spike in Cup X from last year? Almost doubled.
Where was that? I don't know why this keeps pulling up separate screens here. Here's the filing. Let me just zoom out just a smidge there. This is probably a little better to see. Let me see where. This isn't the right person. This is Care Cloud. I don't know why it keeps pulling all these things into separate. I'm sorry, I got to close out of some of these things because I can't find where I'm trying to be here. There's that one. Here's this. It's this one. Okay. I mean, operating costs keep increasing. You know, they're buying shares back, but they also have share payments that are a third of that. That seems just like kind of stupid management.
Yeah, it seems unnecessary.
It's just kind of like backwards. Like, what are you doing? You know, and the mine properties are there, and that's all great. But I mean, is that going to turn into anything? I'm not saying it won't. The next thing I would want to look at is the business. See what their presentations are. You know, what do they think is going to happen with this business?
Can you zoom in a little bit, Dane?
Yeah, hang on here. Get this out of there. I'm just going to scroll down to the main part here. So is that zoomed in enough, or?
Yeah, I think so.
All right. So revenues are increasing. So yeah, I mean, with all these things too, you're always developing, trying to get the infrastructure going. And then from there, you know, when you put the initial money into CapEx, and then you hope from there that as that price or CapEx starts to go back down, that your profit outweighs your amortization and depreciation, and that you make a lot of money on that.
And you know, a lot of these are based in other countries, but we have talked about the foreign risk in the past here. What do you think? Do you know about doing business in Brazil? Have you any experience by being involved with companies who has been in Brazil before?
Just from you know, Brazil is a company that has just inherent risk, just because it's not always there's a political risk. You know, there's risks in terms of the auditing and how accurate everything is. And, you know, I'm not saying that these guys aren't audited properly, because this is Canada. So I would imagine these numbers are pretty realistic, but it's just figuring out, like, I don't know. I wouldn't say because they have stuff all over the place. It's really this vanadium. It's how important does vanadium become in a lot of these different products and stuff. And, you know, some of these metals and stuff that they're starting to get, some of these guys do have a pretty good niche market, you know, that they can control. But what are they going to do with it? And like I said, if they don't have the earnings just yet, how quickly are these earnings going to, like, earnings are going down right now. You would think as we're getting closer and closer and mining's getting further along, it would be improving. Right?
Yeah.
You said CapEx is going up?
Yeah, I have from minus 35 last year to minus 60 now.
Yeah, I have minus 80 on mine. So then the next thing too is, let's see what on Seeking they're saying. I think I pulled this up. There was one person who was writing on it, right? Oh no, this isn't the same. That was one for CCLD.
Gold Panda.
Gold Panda's always on it.
Yeah. It's a bit mixed though. It's like a buy, hold, buy, hold, buy, hold.
Well, with commodities, I mean, it's a cyclical market, and I think with this too, we're in the early stages of this one. So figuring how much use this is, I just want to see what it says in the general. Challenging quarter, headwinds from operational issues, as well as weak vanadium prices. So that's the thing too, is not only does the business matter, but if the price of whatever you're trying to sell is up and down, this is something that probably have to kind of determine a low side value, and then keep watching the price of vanadium. And if vanadium gets really cheap, the business stays cheap. If you're going to take a position, that's where you do it. And then you hope it all kind of bounces back at the same time. You know, these guys are all talking really on a chart basis on when to buy this one, which probably is somewhat reasonable. He's saying around the $2 mark, there's a lot of support. I have around $1.88 is my pricing for it, which is almost close to a 52-week low.
Yeah.
And obviously my valuation doesn't take into account the price of vanadium as a commodity, you know, as a cyclical commodity. So that's probably $2. You might be able to find support there at $2, really. Obviously, when it touches it, it bounces right up from there, you know?
I'm trying to find a vanadium price chart, but you need subscriptions.
You just try Googling it. That's probably the easiest way to do it.
Yeah, that's what I'm doing, but I can't find a good one.
Oh, here's one. If you just go to, if you just Google this, are you still sharing my screen?
Yeah, yeah.
Yeah. Global market for vanadium is estimated at 38,970 million in the year 2022. It's projected to reach 51,420 million by 2028, representing about it's just shy of a 5% CAGR. So it's just basically saying the market should continue to slowly go up and to the right as everything.
Yeah.
But what's this vanadium price? Yeah, I mean, I don't think you need to really find, specifically, like a chart of prices. What is this? Is this a year? This is silver. This is all silver. This doesn't even show you. Yeah, whatever.
Yeah, those were the
Honestly,
sites.
I don't really care. Oh, and I have looked at these guys before. Interesting. We'll see what I said before. LGO.
And
Oh, did I look at
margins
these
are
guys recently? Oh, I looked at these guys real recently too. That's why. And I said the same thing. I looked at it on the 4th. Is that right? What was this chart doing on the 4th? That would have been a good time to buy. Well, it had dropped down more from there. So from where I said, but yeah, I think it's found support around the $2 mark. So somewhat interesting around there. But same story. I'm discounting it pretty heavily from on that day too.
Yeah.
Yeah, I said $1.88 is a high, and I'm discounting it from there. So once again, why the valuation? It's tough. It's tough to say what some of these things are and aren't.
52-week high at 7. So
yeah, but it's hard to always look in hindsight.
yeah. I don't get the 7 from these numbers. I also saw the margins has drastically fallen the past year.
Well, it's funny. Sometimes time is your worst enemy as a company, because when you have a lack of data, you only can go off a few numbers. And like, for instance, if you look here, like if you're looking at year 2021 for my data, like you have book value at $4. You have what looks to be fantastic earnings, great cash flow. And then from there on, it just keeps going down. So the longer you see this company be, that it's around, you just realize it's not able to really produce like it had hoped. It's burning through its cash, and its cash that it's burning through is the only reason these earnings even looked decent. And now all of a sudden it's starting to fall apart, and it can't keep up with it. And it's going to have to either dilute or take on debt. I mean, and I imagine it would dilute shareholders, because who wants to take on debt in this environment? Although I don't know exactly what the rates are for like Canada and some of these other countries where they might be able to get their loans from rate wise.
Yeah.
And they're spending all this on CapEx, and assets haven't even increased that much.
No, they haven't. Actually done the opposite.
So it's a little ugly for sure.
Yeah, I think for me, I'm not adding either one of these to the tracker, but it's now I know the tickers, so I will pay attention to them if they come up in my screener again.
Yeah. No, I mean, I'm not saying there's nothing here. It's just not right now. I think that's the thing with most things, because I know Johnny said sometimes too, like, oh, we didn't find many tickers. And I feel like it's not that we're not finding tickers. It's just that, you have to go through and there's a lot of research to be done. And the more you do this, the easier it becomes. You've seen the companies, you understand each of the industries every day just a little bit better. It forces you to look at things and realize the interconnectedness of all this on top of everything else that's going on in the more macro environment. And as you start to see like a company like this, or even like CareCloud, how we're looking at it, as a company responds and reacts over time, you're able to better predict how that will, I feel like, compared to other factors. So it can help you to make better sound decisions just from looking at them. Because right now it might not be interesting, but let's say a year from now something changes, and Johnny and I are like, oh, we saw how this happened before with the company. There's a good chance it's going to do the same thing going forward. And if you're able to kind of get in and capitalize on that, that's really the trick. It's always understanding the business. It's always understanding how it's going to react to the different things going on in the environment around it.
Yeah. And also in the context of that, like when I said we haven't found so much, what I really mean is something new, because I see a lot of the tickets that I've already done research on, they show up in the screener and they are still interesting, but
right.
I already have them.
Right. I was just gonna quickly go through my movers, just see if there's anything in here that kind of interests me.
Yeah.
Have you went through the stuff from yesterday?
Just quickly on my end, I see one ticker now that I think we could maybe pull up, SOHU, SOHU.com Limited. You probably don't have them because they are only 8% up on Friday.
SOHU?
Yeah.
China?
Oh, is it Chinese?
Yeah. Well, SOHU, that probably. But they have been around for a while, so there is actually a good amount of data on them. So it's not to say we can't evaluate them. But see, the problem too is like, why all of a sudden are they just not releasing some of this cash flow? Like the numbers just get wonky. That's the problem sometimes, is like, and I'm sure this is just share radar data. It's failing to be able to pull the stuff accurately from the SEC reports, which I get it. That's a data scraping service. So I'm not sure exactly how they're set up, but it's going to run into issues. Like all of a sudden cash flow for me is just zero. So honestly, I don't think I'm going to be able to really fairly evaluate this one.
Yeah. Did you see NNBR? Remember them? I was in them, remember? And
yes, I do remember them.
I got a double pretty quickly and I sold out, which was in hindsight a mistake because they have gone up like 2 times.
Where did you get in on them?
Huh?
Where did you buy in on NNBR?
At $1.
Damn, you timed that perfect.
Yeah, that was a historic low, I think.
Yeah. More interested to pull them up than SOHU.
Yeah. In May is when I bought, and I think I sold already in July. I was happy with a double, and actually it continued to go up to 3, and then it pulled down to 2 again, and now it has gone up to almost 4 soon. So that was a mistake by me to sell, because it has gone really well.
Yeah, I think I have to adjust for these. I don't know. It didn't pull them into my initial spreadsheet, so there's some errors here. So I just have to go. Let me just see why they didn't get pulled in real quick here.
Yeah, I can switch to mine meanwhile again.
Yeah, if you want to go to yours, I think all I need to do is just update my data card here, because for some reason it just didn't update them when I.
Could you just stop sharing your screen again then, Dane?
Yep.
Perfect.
Sorry, I gotta remember that to adjust it so it does that for you.
Yeah. So I'm pulling them up now. NNBR. The Starboss is he was in this one. I think he sold out at the same level as me, but I'm not gonna say that for sure. But I think he mentioned that he at least trimmed the position around $2. And there was some news, which is why they were up now. NN secures 10 million new business win in automotive electrical wiring. So they got a new contract or something like that.
Gotcha.
But I'm not sure if...
Update my sheet here.
Yeah, let me know when you get the fundamentals up, because I'm not sure if you can... Like, it looks a bit expensive straight away. And they do have some depth, but I think at $1 this was a good entry. Down here, I think I got 105 was my entry.
Yeah, I'm just trying to figure out how to get this stupid thing to refresh. I can refresh my whole thing. Maybe, I mean, I guess I could just do that. It's just going to take a sec. I wanted to just refresh these cells only. I got to figure out how to do. Let me just figure that out real quick, because I should know that anyways. I'm sure I've done it in the past.
I can go through the insiders, because there's been an insider buy. There was some in May, and then there was in the end of November a bigger one, 118,000. It's not a massive buy, but it's still a good number, I think, because the previous ones has been a bit lower. And also there was a fund, Core Partners Management, which continued to buy. Look here in May, where I got involved, they just bought, which made me also think that it helped me to do my thinking a bit. I did some research on this fund, and they are value oriented. Deep value investments across the capital structure in middle markets companies that are experienced temporal challenges. We target underfollowed companies in turnaround, and our investments may include restructurings, stressed opportunities, and other special situations. So they were a bit aligned with our styles, you know.
Yeah, no, they. I think you might have had something here.
Yeah,
but this is the thing. I'm trying to remember what I said about NNBR, and it is updated now, so my stuff's all good. And I came up with a valuation of around $2, basically.
Yeah.
So this would have definitely been heavily on sale at $1. Now, granted, the way my calculator works, it would have said it was. It probably would have valued it around maybe $1.50 or $1.60 at the time, just because it would have discounted, just because the share price was so much lower. But it does look interesting on that. And but this is why I said too, I mean, you take a heavy position in NNBR and it becomes a 2 or 3 bagger. You said you sold out at what, a 2 bagger?
Yeah, no, I got a double.
A double. So even with a double though, I had said it was worth $1.70, and I wanted it to get down to 85. Why did I want it to get down to 85? This was before my valuation kind of technique had changed here. So
but I bet you saw the cash flow generation is not fantastic here. It's more like the asset play, like an asset play.
Yeah, I mean, I'd have to read in to see what the assets, if someone thinks something was mispriced. I said, on a book value, I mean, if we're just looking at book value, it's definitely saying it's worth, $4, $3 if you discount it for the leverage,
Yeah, and that's what I said. Like at this level, 367, I think it's not cheap anymore, I think. But
no, it's not cheap. I could see how people could argue it's fairly valued right now.
Yeah. I
You
saw
know,
some
even on
comments. I saw some comments on the news the other day. Shorts keep defending 320. Eventually, they will lose. I didn't see big short interest, but I think his point was that the short interest is 20 days of volume. That is why it matters. I would also guess that the vast majority of 1.33 million shorted shares are held by only 1 or 2 different funds. All that said, I don't think it's a huge deal, just a possible reason why it's been tough to breach the 320. But now it has.
Yeah, what does the chart look like on here? I wonder if they're starting to sell out here.
Yeah, it's overbought, but it also took out the 3, like he said, around 320.
And how many shares they got outstanding? 47 million. Yeah, I mean that the shorts could be getting punished right now. I see what
Yeah.
you're saying. Because I mean, this is a pretty bullish month here, really.
Yeah, the chart looks very good if you isolate it from May.
And really, I mean, there was this big sellout that caused the last big push, and that was 120,000 shares. But you're talking, I don't think these short guys have really gotten out of this just yet.
No.
If they are, they're slowly selling down out of this. 140,000 shares there. No, it's just
The
$10
last
million.
date I have on the short information is from end of November. 1.32 million short shares.
Yeah, and they actually generated earnings this last quarter.
Yeah.
In Q3. Man, 8% jump too yesterday, and then a 1.9, so it's a 10% jump just on the on one day.
On the business. I saw the latest article. It's from July, so it's not recent, but that had a sell recommendation from Horizon. Have you heard about Horizon Capital or whatever the name is?
The name sounds familiar. Yeah, I mean the name sounds familiar. I'm not sure what what you got on those guys.
And I know Starbucks was involved, like I said earlier, but I haven't seen him in a while there, so I'm not sure if he's still there.
Yeah, he's all involved in NCSM.
Yeah, yeah. No, but I was at the time I was happy with the double. I got to spread out my bet a little bit more, and it went very quickly. Just a month it took.
Well, sometimes when these things get really cheap, you know, that's when you can see a quick bounce.
Yeah.
Yeah. You know, I had them on deck too and everything.
Yeah. You're beating yourself up now.
You know, like I said, the valuation techniques change too. So it's going to happen. You're going to see times where it gets not quite
if you
as
zoom out though, all the way on the chart, that was actually a historic low it reached, a little bit under $1.
Yeah.
Yeah.
Well, and you know, this is the thing too, is you even when I miss it, it just makes me, you know, think about my valuation techniques now, and if I would have been valuing it, you know, today versus, you know, a year ago or half a year ago, I would have said this was a buy. So
yeah.
Now, I mean, just on a valuation, as in like, you know, I think it's within my margin of safety. That doesn't mean it's a buy in general, because there's a ton of things that fall within what I consider my margin of safety, but just I'm not confident enough on other things to. But there was the There was good insiders too, though, a year ago.
Yeah,
when
this
you were
this
talking.
fund made me strengthen my belief that that was a good entry.
Yeah, I mean they own 6 million shares, so
Yeah,
at a
and
dollar,
they
I
kept
see.
buying. They just kept
Yeah,
buying.
no, I mean looking back, I mean this is bullish.
Yeah.
They bought in March around the dollar mark. Man, they were nailing the bottom too. Holy smokes!
Yeah, but if you go back a bit further than that, they bought in a bit higher, and those were way bigger buys at $2.
Yeah, but I mean it's smart for a company. If you're going to average down, though, you average down because you think it's worth averaging down. You
Yeah,
sell out when you make a mistake. You average down when you think like, no, this is just continuing to get mispriced, and I can get a better, um, you know, chance at hitting the lows and bring my cost basis down.
yeah,
So sometimes I see these companies and I'm a little surprised because where they got in and where they're buying now is so drastically different. But it just, it has to mean that you're bullish on the business because, or you're just a moron. But
you're very stubborn. But
yeah,
it's also
yeah, which,
interesting to see that they have stopped buying after May, and maybe you should expect a little bit of selling from them soon.
yeah, I don't know unless they think, I mean, if they were willing to buy the $2 mark, yeah, they've definitely, I would be curious to see where they value it at. Like I said, I value it even on a book value basis. If you account for the leverage, my one thing says just shy of $4 it could get up to,
Yeah,
which that's about where we're trending now. So who knows? I mean, the shorts, maybe the short here gets pushed out and it bounces up just a little higher. But I mean, like you said, it's oversold now or overbought now. So
yeah. But it's interesting. I'm reading on their website and it says they say we aim to know our companies better than anyone else and approach our diligence as if we own them outright, regardless of the targeted security. This ownership mindset drives our research deeper and away from a short-term outlook. So who knows?
yeah,
They might be sitting on this for a long time.
yeah, and that, I mean, but that's how you're supposed to invest. That's investing. I mean,
Yeah,
that's really investing.
yeah,
Like I said, the only reason why you and I are able to kind of look at these things in shorter terms, it's the exact opposite reason of why Wall Street does it. Wall Street does it because they just have to stay with the mean of everything, because they don't want to underperform, because they don't want people to leave their funds. But you and I, we're small as retail investors. We're able to get in and out of these things nimbly, and you can make a ton of money doing that. So we just have an advantage being that small that we can do that. But and most people would argue that because of volatility and beta that we're taking too much risk on. But that's why you're just waiting for, at least for me, I'm waiting for these slow pitches, as Buffett says. And I'm not. I don't care when I miss things. I care if I make a mistake. That's when I care.
yeah,
So because of the mistakes, I'm hesitant at times to look at these things. But if you're this sized fund and you're going to buy into a company like this, you should be holding it for the long term, because if you own that many shares, you're not going to, it's almost like Stavos with NCSM. I don't think he can sell out super quick from that. Reason being is, if you own that much of the float and you try and sell out, you're going to lose a lot of your gains. It has to get up to a certain, like it has to get to a certain point where selling would make sense,
yeah,
Either that or you find another business that interests you more and you start to pull out of this to go into those.
yeah,
But like these guys said, if they're looking at businesses truly from the business perspective and they're trying to make money on that and trying to stick with a business that's continuing to improve over time, you have to wait it out. You have to dig so deep into any other company before you're going to pull out of this to go into another one. So just on that alone, you're going to take your time. It's not going to be a quick moving thing, and you just have to have your timing right. So that's why I said I think it's pretty bullish, actually, to think that those guys are continuing to average down into this.
yeah. That was good to see, and I think it's hard to say from here where it will go, but and if I held until now, I'm pretty sure I would trim heavily here. Honestly, that would be that would be a lot for me. So it's also about taking the gains, you know. It's
Yes, I
easy
mean,
to be
yeah.
a bit
No matter what, you have to perform.
yeah. It's easy to become a bit greedy, but a gain is a gain in my world.
Yeah, and this is why I always return to, you know, free cash flow and cash flow from operations, and trying to find ways that the business is going to return capital to you. You know, are they, you know, when someone like buys an asset or sells an asset, does that money come back to shareholders? Because if not, then, you know, to me, it just means management's doing things for, you know, reasons other than shareholders, whatever they may be, good or bad. So I just it's always unlocking value. I always think that's the most important thing.
Yeah.
Is how is that money going to come back to shareholders?
All right. Do you have anything more, or was this as far as we got today, or?
Yeah, I think only, like I said, I gotta keep moving here, just because we gotta get around and finish up our day here.
Yeah.
But yeah, off air, I'll shoot you if I find any other tickers that are interesting. I got a lot of reading I want to get done this weekend and kind of over the holiday period. So I would like to get through some of that. So I might take a break from actually going through the actual investment side of things here and just try and get some of my reading done. And I think I have 2 or 3 other books I asked for, you know, for the holiday. So I'll probably feel like I'm overwhelmed in text. But it's good. I every time I read a book, you know, even if I only take a few things from it, it just kind of helps to. It's always helping to conceptualize, you know, what's going on and solidify my confidence in the way I value things and you know in the way I assess risk. Because I think, at least particularly for our strategy, those 2 things are hyper important. You know.
Yeah.
But yeah, if you find anything, yeah, let me know, man. I'll do
I
the
will
same.
let you know. And are we gonna see you on Tuesday, or will you be too busy?
Yeah, no, I do plan on streaming Tuesday. I mean, my work week is going to be a pretty normal work week, despite the fact that what do you call it? It'll be like the holiday period. I'm not off or anything for the regular. I got off on Christmas on Monday, but then it's back to normal. So, and then the following weekend too, it'll probably be similar, guys, to this style, just because I won't be here in my home. I'll be on my laptop because I'll be away for that weekend.
Yeah.
So we'll just continue to have Johnny here host, and you know, I'll just be trying to
pick it up again in January when the holidays are a bit over, and we of course we wish everyone a Merry Christmas, and I hope everyone will enjoy the Christmas time, and also a Happy New Year. Even though I think we will stream a little bit before the New Year, right?
I mean, we'll have our normal streams. You're planning on streaming, correct?
Yeah, I can also stream on Thursday, so we will see you before New Year's. But
yeah, we'll see what happens for the closeout of the year. I mean, I would say this year was more bullish than I would have thought. You know, it looks like rates and everything are starting to come down. Inflation's coming down, so this seems to indicate, you know, the impossible soft landing that they speak of. So, you know, it's exciting as a. Well,
maybe
we'll
we can
see.
have maybe we can have a little bit of a section in one stream early in January where we go through the year and our portfolios and how our thinking, like a little bit like NNBR now, you know.
Yeah, I mean, and I think also too, we'll tend to touch on tickers that we've been in and out of, because it just tends to be how it works. Like if you've seen a name and something's changing with it and you've already been in it, or you've at least really looked at it before, it's kind of hard not to want to check it out again and to go through it, because those are always potential buys, you know?
Yeah. And also when you own something, you get super dialed in and you know the companies, and it's easier to pick up the, how do you say, pick up the track at a later stage, even though you have been out for it for maybe 6 months or a year, it's easy to get back into it again.
Yeah, and I think that's a lot of times that's where the chart plays in. You know, sometimes you
Yeah.
can pull up the chart real quick and you'll notice that someone's getting back cheap again.
Yeah.
And then it's just diving in to see what's changed. You know, has anything happened? You know, what's the story going on there?
Yeah.
Yeah, there's a bunch of things still on the tracker and on my dashboard that I'm just trying to work on and get improved. So hopefully, same thing during the holiday period, I can get some of that stuff ironed out, which will help the screening process. Because really, that's what it's about, is just staying on top of the screening, you know.
Yeah. And Dane, just remember the Christmas gift.
Oh yeah, of course.
Yeah.
Merry Christmas.
All right. Bye. Bye, everyone.
Happy holidays, everybody. Merry
Happy
Christmas.
holidays.
It's a little early for me, so I'm just drinking the old H2O, but
All right.
we'll cheers you. We'll cheers you on the next one.
Yeah.
Maybe we'll do a live New Year's stream.
Oh yeah. We should do that.
That'd be fun.
All right. Bye-bye.
All right. Have a good one, guys.